Good afternoon, everyone. Thank you for joining today's Back to Business webinar with ICCFA and Live Oak Bank. Excited to spend time with you all today. Today's webinar topic and title is called Smart Money versus Fast Money, How Funeral Homes Should Think About Working Capital. Before we get started today, I do want to send a special thanks to ICCFA. Thank you for all that you do for this industry. Your members, you guys are pioneers, and we appreciate your commitment to our awesome space. I am excited to welcome my colleague today, Kalen Weaver. Kalen is a Senior Business Development Officer at Live Oak Bank, specifically for our Express team. He's a trusted friend of mine, long-term colleague, and just excited to have him join us today for the webinar. Kalen, do you mind saying a few things about yourself and introducing yourself?
Yeah, thank you for the introduction, Andrew. Excited to speak on this topic as I feel like this, is a really important topic that my particular department and you as well have a fantastic solution for, and we love to help business owners just get access to capital as part of our mission. So, excited to talk a little bit more about it. We are, Live Oak, if you're not familiar with it, we're based in Wilmington, North Carolina. That's where our headquarters is. I've been with the bank since 2019, held a variety of different roles, but most recently the Express team that focuses on getting access to capital to customers under $500,000 that can be financed within up to 15 business days at times. So excited to talk more about it.
Awesome, Kalen. Thanks again for joining. And if we haven't had the opportunity to meet yet, my name is Andrew Kennedy. I am a Senior Loan Officer at Live Oak Bank. Like Kalen, I've been around the bank for quite some time now. I started in 2018. I was a business analyst servicing our funeral home and cemetery customers west of Mississippi. Did that for a few years and then had the opportunity to join on the lending team and have been there since. So really excited to spend another hour or so with you guys today. And again, thank you for ICCFA for welcoming myself and Kalen. So again, today's topic is called Smart Money versus Fast Money, How Funeral Homes Should Think About Working Capital. I do want to go over just one more housekeeping item before we get started. We've got a great chat feature that we certainly encourage you guys, the participants, those attending live, to throw in any questions, comments, anything that's on your mind. We enjoy that. It helps with engagement. We want to hear from you guys. We'll have a few questions that we may ask throughout the duration of the webinar today as well. Feel free to chime in via the chat if you have anything that you'd like to add or answer one of the questions that we ask. We appreciate the engagement. As we get started, I wanted to kind of highlight the topics in which we're going to be discussing today. More specifically, we have a nice agenda that we've prepared for today. Really 6 different sections that myself and Kalen will be highlighting, and want to start by just kind of sharing a preview of what we're going to be discussing in more detail. So first, we're going to talk about why working capital matters in funeral service. We're also going to talk about what working capital is, what the definition is, what we believe working capital is. We're also going to talk about the smart money versus fast money, what to look for, what are the red flags, what are the advantages to each, what are your options. We're going to go into further detail in those topics. Next, we're also going to review a case study, example of something that Kalen's team sees regularly. We're going to dive into a little bit more specifically for you guys, keep it relatable. We're also going to review questions that owners should ask before taking on working capital. What should you be thinking about? What should you be asking yourself? What should you be asking your business partners? So we're going to dive in there. And lastly, we're going to talk about how to build a smart working capital strategy. I think anytime that we spend, time in education, connecting with folks, we always like to have an action item. So we're going to end our session today kind of reviewing that game plan for each and every one of you. So our first topic, again, why working capital matters in funeral service. So if you're joining us today You likely have some kind of background in the industry, in the cemetery business. At the end of the day, all of these businesses, regardless of which kind of profession you fall in, maybe it's both, all businesses, specifically funeral homes, are cash flow businesses. But the problem is cash flow isn't always predictable, right? We know in this space specifically that call volume is very cyclical. There's always those years in which business is really good. When we look at a 5-year look back, we tend to see 3 years that are really consistent, really strong. We see one outlier year for the better, and we typically see one outlier year that, wasn't quite as strong as the other years. So we know that this business is cash flow cyclical. We know that call volume can be cyclical. It can be seasonal, also depending on your area. So we understand that, and that's where working capital, the importance on working capital comes into play and how it's critical for business owners. There's also great reward in being a business owner. If you're a business owner on this call, you likely, may feel that. But at the same time, there's also headaches that go with being a business owner. Sometimes we keep those to ourselves. Sometimes we vocalize those, but there's challenges being a business owner. One thing that I enjoy about my job is that I get to talk to entrepreneurs, funeral directors, funeral homeowners, cemetery operators all day, every day. It's a joy. It's a passion of mine. And one thing that I've always learned and what I continue to hear are certain challenges in the space, right? And that's call volume swings. That's cremation rates. That's, difficulty in collecting payments, collecting accounts receivables, difficulties due to the seasonal changes, payroll commitments, right? You most likely have a strong staff. Oftentimes owners are only as good as their staff. We have to pay our staff. We have to reward them for their hard work. Sometimes, cash flow can be difficult and tight. We got to make sure that we're having sufficient funding to pay our payroll commitments. Other items include merchandise and inventory, and then, of course, the unexpected facility or crematory expenses, right? We know that oftentimes as a business owner, there are always unexpected expenses. How do we prepare for that? What are our options? Can we finance some of these? We'll dive more into that today. The problem, when cash gets tight, urgency can drive decisions, right? Which leads us to the overarching question for today. Do I need fast money or do I need the right money? I get that question all the time. I know my colleague Kalen does as well. So we just want to provide a little bit more education and kind of what the difference is between fast money and the right money and what the advantages are for each. So one question for the group, and feel free to, answer via the chat if you have the courage to do so. But what is the biggest working capital challenge that you or your business faces today? So again, if you're not an owner, feel free to still chime in. But if you are an owner and have the courage to, talk about what may be a challenge for you, we would love to hear that. What exactly is working capital? I think it's important before we go any further to define what working capital is. And in our opinion, that is the money available to operate the business while waiting for cash to come in. I think that's a simple way to look at operating capital, which it's often referred to, but for today and what we typically refer to it as working capital. Working capital is foundational to your business. It's essentially the cash that you have in hand to cover your short-term expenses, debt obligations, etc. Having adequate working capital allows entrepreneurs to meet everyday financial obligations. It allows you to grow the business, right? As a business owner, I'm sure you're in the weeds. You're familiar with the good, with the bad. You've probably performed SWOT analysis for your business. but working capital can help grow the business. It allows for investing in marketing and new products as well. Looks like Ruby, appreciate you throwing in a comment here. Starting new construction while using current working cash flow when it fluctuates. Very true, very true. A lot of what we do too are providing working capital loans for construction, real estate improvements, leasehold improvements. That's certainly one thing that is eligible for working capital. We hear that all the time. Whether you're looking to fix something or whether you're looking to just simply upgrade your facility, certainly a working capital need for that. And we appreciate, Ruby, your participation and sharing that. You're probably not alone in that. And we'll talk a little bit more about that as well. Having adequate working capital also allows business owners to handle the unexpected cost, dealing with equipment breakdowns, construction costs, one-time expenses, or slower months. Working capital can provide a sense of ease to a business owner, knowing that you have the right amount, which is another thing that we'll talk about. What's the right amount for you to have and keep in your bank account for the rainy day or the unexpected expense? Also, just want to highlight the idea and the concept regarding cash conversion. This is simply defined as the money going out, services are performed, money comes in, right? The gap between those events is where working capital matters. That is the definition of working capital. So I'm going to turn it over to Kalen. And Kalen, if you wouldn't mind just kind of talking about kind of the differences between smart money versus fast money, how your department, how you guys look at that. What can you share about smart money versus fast money?
Yeah, happy to. So before we do that, I think it's important to recognize, so my particular department, like I said, we offer loans up to $500,000, usually solving for some of the problems that Andrew addressed earlier with regard to working capital and things that funeral homeowners run into oftentimes on a weekly, if not daily basis. And so by doing so, we get a glimpse into sort of all different types of requests, and usually the requests may vary, and we see folks trying to determine which options are good for them, and they've got the quick money options, which we refer to as some of those like merchant cash advances, some of those options out there that you get access to that are you can get access to them today, but they typically come with really high interest rates, oftentimes weekly payments, things like that. Whereas our particular loan product is a fully amortized loan, similar to what you probably have seen with the traditional SBA 7A. And there's no prepayment penalties, and it's just flexible terms all around. So just wanted to add that as a caveat before you kind of walk into or break down fast money versus the smart money and what we're talking about today. So when we think of fast money, I think of funds like I just described that are hitting your account fairly quickly, but oftentimes come with offs. So the economics of the money that you're receiving aren't that great. So higher interest rates, think shorter payback periods, things like that. Fast money also solves for today's problem. So oftentimes, it's a quick need. So you're reacting to a need that your business has that maybe you weren't planning for. So you think I have to get the funds now. And so, kind of urgency. So oftentimes fast money that's when it's needed. Whereas smart money would be thinking through like the underlying issue of your business. What are the swings? What are the things I need to be prepared for? If there's seasonality, the things that you experience in your business, what can we plan for or be prepared for when we're thinking about our working capital needs and the cash available that we need to have on hand? Oftentimes fast money is easy to say yes. That just typically means that, if you're going to apply, those companies understand that the businesses and the customers that they are coming into contact with are typically needing the money pretty quickly. So their terms to receive those funds are, don't necessarily need to do a whole lot of due diligence on the customer. So therefore, their trade-off is a higher interest rate, things like that. So we, on the other hand, when we think about smart money, we want to, evaluate, make sure it's the right fit for the customer. And that's where we find ourselves adding value and solving for the underlying issue. Smart money is oftentimes, we talk about higher costs tied to the loan. There's greater flexibility with smarter, loans that are out there that come with longer terms. And last but not least, there's a wide variety of things we can talk about more about smart versus fast. But I think the biggest thing that is a key differentiating factor of fast versus smart money is oftentimes fast money can create cash crunches. So if you've got weekly payments needing to be made, if you've got a slower week, don't have the cash available, there's a cash crunch, right? Versus smart money, when you're planning long term, oftentimes the loan having a longer payback period allows for your cash flow there to be an easing of payments with your cash flow. So always helpful to think through versus, the benefits and pros and cons versus, the fast and smart money opportunities. So next, we kind of talk about red flags when reviewing fast money, money that's going to be accessible within, the next 24 to 48 business day or business hours, excuse me. And some of that looks like, the red flags would include payment structures, doesn't meet your cash flow needs. So if you're needing cash today, but you know that there's going to be some swings in the business, then maybe weekly payments aren't the best option for you, or a shorter term is not going to be beneficial if you have to pay all those funds back within 24 to 48 months. There's oftentimes high cost involved. We talked about interest rate. So usually with merchant cash advances or any sort of quick access money, there's a higher interest rate. So it's usually anywhere between 20 to, oftentimes we see requests to refinance these loans, and the interest rates are as high as 60%, which is really crazy. The weekly, daily burden of payments, we talked a little bit about that. Oftentimes customers aren't having a full understanding of the personal guarantee that comes with these loans, and what is all required of their business. So just not having a full understanding of what is required of the loan before you get access to it. Like we've talked about before, fast money, you're usually moving pretty quickly. So you don't have a full understanding of what it is that your business is signing up for, and where on the dotted line you're signing. That can oftentimes have ramifications in the long term. And then another red flag would be, and I've kind of wrapped this section up with, if you're borrowing for a need that continues to be repeated. So, solving for seasonality, for example, where there's a swings in business, and you're finding yourself, we've got to the same time of the year where we're looking for, some working capital for a specific reason, 100 to 200,000, whatever that might be. And it seems like you're coming back every single time for that particular need. And if the solution isn't being solved with some long-term, well thought through, investment, then we continue to see stress whenever fast money is considered as being the option there. So yeah, overall, in summary, sometimes the fastest money ends up being the most expensive money, and we see that as I see that fairly often in a lot of refinance requests where folks are looking to refinance these types of loans, and oftentimes it's hard because they need it done fairly quickly because it's not benefiting their business, and so it creates even more of a hassle or issue for the business that wasn't foreseen sooner rather than later. So I'd love to open it up for folks if you want to contribute on what is the cost of getting cash faster, and does that cost make sense for problems that we're solving?
Kalen, I think you make a lot of great points there too. I think, the way I hear what you're saying in my mind is, there's value in speaking to the right people, whether that's, a banker, your consultant, you're an accountant. You need to have that team around you. You need to, as soon as you start to feel that stress of poor cash flow, or tight cash flow, I should say, you need to look into your options, and you need to know what options are available. You need to know kind of the pros and cons to each. But I think the sooner you can plan, and making sure that you have that healthy reserve on hand, can just lead to better decision making. You have more time to plan versus, I've got to do this, and what is my best and quickest option, right? Because the quickest and the best option may or may not be the same. So I think it's important to, understand what the differences are, which I appreciate you kind of going through those. But then also, if you're an owner or an entrepreneur, that's, this is very relevant to you, right? And if you feel, and if you've been the business owner for 2 decades and you have had the same part of each year be your slow spurt, plan for it. Plan it. The most successful business owners, in my opinion, are the ones that always have a plan and are ready for the unexpected.
Yeah, I agree. I think you hit on it earlier, but having a team is really important. That's why, having connections like Andrew and myself, and I work a lot with CPA professionals, because they're digging into the books of our business owners on a daily basis. And so they're your trusted, advisors in this situation, and can help you plan what makes the most sense for your business, and what can you take on where it makes the most sense. And so planning is key, and then also just executing on who's in your corner is going to be good as well. So let's move on to our short case study. Again, like Andrew mentioned in the beginning, my team looks at a lot of loan requests that are working capital, smaller loan requests within the funeral home industry, along with several other industries. And so we figured it would be beneficial for folks to see and hear an example of what maybe a typical request looks like, and how we can think through whether it makes sense to go the fast money route, or kind of take steps towards smart money options, alternatives that make a little bit more sense. So in our example, a funeral home needs $150,000 to cover a short-term working capital gap. The funeral home owner has 2 options here. The first option, what we talked about earlier, receive funds, get access to funds that are available quickly. These funds might come with a higher cost, more frequent payments, and minimal underwriting, thus leading to a little bit less stress up front. That gives the owner a quick fix to their capital issue. Whereas alternatively, the customer could take the option to reach out to their partners, go through a process of maybe a little bit longer of a underwriting process or period, with lower overall cost and upfront commitment. And then but the trade-off there is that they get a longer term, easing cash flow, and better aligned with cash flow requirements that the funeral may have for a long period of time. So I'd love to open the floor to you guys to which option would you go or select for this particular customer, and what your thoughts are there.
Got a quiet bunch today, but that's okay. That's okay. Just want to get you guys thinking as well, right? So these can be just thought of questions for you to think about. We know that not everybody wants to speak up, and that's totally fine. Just want to, provoke thoughts, provoke different ways to think about working capital as we kind of dive deeper into kind of the differences and what's available to you.
Yeah. Yeah, absolutely. And then just really hammer home the idea that smart money isn't always the cheapest money. So, and as likewise with kind of fast money there, but it's the financing that best matches you all's needs. So whatever the purpose is, the timing, cash flow, or requirements of the business, the risk and repayment capacity of the business. So, Andrew, I don't know if you want to go into the 4 questions that every funeral home owner should ask before taking on working capital.
Yeah, definitely. I think, this kind of moves into the section that we wanted to provide a next step for, if you will. Always want to be thinking ahead. I think anytime, you're a business owner or a key employee that's looking to stay ahead of the curve, that's really important. This industry has seen a lot of change recently, and will continue to see change. So I think it's really important, to be prepared to ask questions to yourself, to colleagues, to other directors and owners in your circle. So we really identified 4 questions that we wanted to share with you guys, that every funeral home should be asking before they agree or take on working capital. So first and foremost, why do we need the money? Why do we need the money? Why do we need the working capital? A few different reasons for that, in my opinion. It's a temporary cash flow gap, right? We talked about how the industry and how businesses can be seasonal, how it can be cyclical. Could working capital be a temporary cash flow gap for you? Is the reason for the money for future growth, right? An example of that could be wanting to, borrow some additional operating capital to implement different kinds of services, to purchase equipment for that, updating the facility to better serve your community, right? It could be to, open up a new or expand off of your existing footprint to offer a event center, right? A place to cater for the family. So there's a lot of different ideas. A lot of these are being implemented in our industry today, and I'm sure that there's more ideas that will come. But a lot of times you may need the money to fulfill your growth plans. So keep that in mind as well. Business owners also may need the money for an acquisition, right? You need capital to buy another business, to buy real estate. Those are uses for a reason to taking on working capital. Most common that we see are equipment, right? There's a lot of equipment in this space. And, Kalen and his team, they finance equipment, and they can do so with working capital loans that we're discussing here. Also popular routes for why people need money are for renovation capital, to upgrade the facility, to give it a fresh coating, to repave parking lot, new roofs, right? You're going to need operating capital or working capital to do that. Other things that we noted as well previously were payroll requirements, right? You've got to pay your staff. You've got to be able to pay you, in a time of crunch, a difficult time for the business, working capital could be a solution for that. Additionally, Kalen has hit on this a couple times now, but working capital can also be designed for debt repayment. And then, of course, the unexpected expense, right? Something's going to break. It happens every year. It could be having to replace a new furnace, a new AC unit, a new vehicle for the business, right? Things are going to happen. Do you have the capital that you need on hand to fix it, or to get what you need to do to advance the business forward? If not, maybe a working capital loan could be the solution to you. And now that we know a little bit of the differences in fast money versus smart money, you now may be better equipped to do that and make that right decision. But again, as we've talked about before, you're never alone in this, right? Have people in your corner, have your support team, bounce ideas off, talk to the right people, talk to the folks that understand this industry, talk to banks that know this industry, and they will give you the guidance that you need to make the best decision for you and your business. Don't finance a permanent problem with temporary money. That's a point that we wanted to drive and, address on more than one occasion during this webinar. Don't finance a permanent problem with temporary money. The second question, how much do we actually need? I think we should, as a business, if I were a business owner, right, I would be thinking about what's the minimum amount that solves the problem, right? I don't want to borrow more money than I need to, right? I don't want to pay back interest on money that I don't need. But what is the minimum amount of money that I need? There's nothing wrong with getting the money that you need and then realizing that you may need a little bit more and then taking on more working capital, getting a second working capital loan to backfill what you need. We want to make sure that you're not borrowing more money than you need, so you're not paying interest back and it's just sitting there, right? As a business owner, you should be, looking at the books continuously, looking at the expenses, making, smart business decisions. And then one of those, digging deeper into that aspect or thought is, what is the minimum amount that solves the problem? So be thinking about that if you do have a working capital need. Third question, if I'm a funeral home owner, what I should be asking about working capital is how quickly can we repay it? Some things to examine are expected cash inflows, monthly obligations. What is the contractual payment amount to my lender each month? Is that something that I can afford? Seasonality, right? Existing debt. Realistic cash flow, not optimistic cash flow. These are all things that you should be familiarizing yourself with for your business, before you take on working capital and as you start to think about how quickly you can repay it. As Kalen mentioned before, there are loan products available to you that don't have repayment penalties, right? You could pay the debt off as quickly as you like. There's high reward to that, right? Regardless of what the interest is, you could take out short money or a minimum loan amount and pay the debt back as aggressively as possible. That is a strategy that, we see many business owners take advantage of all day, every day. Lastly, what's the true cost, right? And I think Kalen alluded to this earlier, but don't look at just the interest rate. There's a lot of things to consider when looking at the cost of taking on a working capital loan. A few highlights to those or a few points. Fees, right? Are there any fees tied to getting a working capital loan? If so, how much are the fees, right? That's something that you need to be asking your bank, your lender, your consultant, anyone that's giving you guidance. They should know all the answers to these questions, but you should be thinking about what the fee is, right? Are there origination costs? Is there an SBA guarantee fee? Is there an origination fee for a non-SBA loan? Make sure you ask those questions. Make sure you consider that before agreeing to any dollar amount. Be familiar with the prepayment terms, right? There are loan products out there under certain dollar amounts and certain amortizations and loan terms that do not have prepayment penalties. Make sure that you're asking about that, making sure that you are factoring that into your total debt repayment, your total debt load, your short versus long-term debt. Making sure that you understand repayment terms is critical. What are the collateral requirements? Is there a collateral requirement? Something to consider, something to ask, making sure that you understand everything before taking on a loan or making a business decision is very critical. What is the impact, if any, on future borrowing capacity, right? I think that's really, really important. We could spend a lot of time talking about that. Anytime you borrow money, you want to make sure that the source of repayment is business cash flow. You want to make sure that your business cash flow can support that additional debt that you're taking on, right? Because if so, whether you're buying another business with the cash flow that you're, the money that you're borrowing, or it is to reconsolidate debt, or if it's for equipment, you always want to make sure the borrowed money can be supported with the historical and the existing cash flow. In doing such, in taking on good debt, not bad debt, but good debt, can allow you to advance your business forward. It can also help you open up future opportunities, other future lending opportunities. I know that many banks, many lenders enjoy working with repeated customers, right? It's a more streamlined approach. There's existing information in the file that we already have. There's familiarity with with the lender, with the bank. We love helping our existing customers. We love helping them, grow. We love seeing them be successful. If we can do anything to help our existing customers achieve their goals, that's very fulfilling to both myself, Kalen, and everyone, right? So that's really important. But again, there's benefits to, potentially starting a bank relationship with a simple need of a working capital request, right? As long as it's smart money, as long as it's checks the boxes for what you and your business need, and it's going to continue to propel your business forward. So again, in summary, 4 questions every funeral home should be asking itself before it takes on any additional working capital. 1, why do we need the money? Don't finance a permanent problem with temporary money. Second question is, how much capital do we really need? How quickly can we repay the debt? And 4, what's the cost? What's the true cost at the end of the day for a working capital loan? So as we prepare to wrap up, we put together what we'll call a working capital strategy. We think it's important to provide a plan. Anytime that we gather, we want to provide a simple action plan. We want to give you guys some things to think about as we prepare, or as you prepare for what's next for your business, your enterprise. So we've created what we'll call the funeral home working capital checklist, right? And we've noted 10 things, which we'll run through 1 or 2 times. First is know your average monthly cash burn. Know your burn rate. How much per month are your total expenses? Really, really important. Every business owner should know what their total monthly expenses are. So that would include, your utilities, your cost of goods sold, right? Your staff, your payroll, your personnel expenses. If you pay, your legal or accountant monthly, annual, you should always make sure that you know what your monthly expenses are. Understand your cash conversion cycle. Really, really important. Knowing the money that's coming in, knowing the money that's going out, what's left over. Identifying predictable cash flow gaps. Number 3. Number 4, establish a minimum cash reserve, right? Every business owner should have, an adequate working capital business savings account, right? What that number looks like may vary depending on the business, may vary depending on the business owner. We have, ideas to what that could and should look like, and happy to spend more time talking about that in the future. But figuring out what your comfort level is, right? Is that 6 months of expenses in debt? Is that 3 months? Is that a year, right? Making sure that you know what your monthly expenses are, understanding the seasonality to your business is really important and can help you make those decisions a little bit more clearly. Know your borrowing capacity before you need it. Match financing duration to the underlying need, right? Kalen talked about that in great detail earlier when he was comparing the smart money versus the fast money. Compare the total cost, not just the rate, right? What is the total cost of doing business? What hidden fees? What fees are there? Are there fees? What are the debt repayment terms? What does that look like? Look more than just the interest rate. Interest rate's really important, but probably should not be the end all be all. Stress test repayment under a slow month, right? If you can afford all expenses and all future debt obligations in your slowest month, well, you can afford it in the average and the great month. So always be looking at, your slowest months, looking at your cash flow, looking at your expenses before taking on any additional debt. Review working capital regularly, right? Figuring out, watching the business bank account is really important, right? And again, the more experience you have, the more you look at this, the easier this gets. And again, that goes back to understanding what your comfort level is with the money that you have in your bank, that you have in your business bank account. What's too much? What's just right? Rely on your accountants, rely on the consultants, Rely on those that are dedicated to the space to give you that guidance if you're unsure or still deciding what your comfort level is. And last but not least, number 10, don't wait until you're desperate to explore options. I'll repeat that. Don't wait until you're desperate to explore options. Always plan for the future, right? We know that life throws curveballs. Business owners are throwing curveballs all the time, right? There's so many unexpected headaches, expenses, things that can pop up. You want to make sure that you're prepared for that, right? So again, that can go back to having, that money that you need in the bank account. Maybe that's a working capital loan to get that money in the bank account to help you propel your business forward. Look at refinancing debt, taking on new projects around the funeral home, construction ideas, equipment, new vehicles, right? These are things that we see all the time, but you have to make sure that you're prepared and that you're ready. And the last thing, you want to do is find yourself behind the 8 ball and in a situation where you're in a dire need. So making sure that you have a plan, making sure that you're looking at your business financials, your bank accounts regularly, making sure that you have that reserve that you need, or you're planning. What are you doing to increase that reserve if you're not happy or need a little bit more? So again, at the end of the day, as we kind of wrap up and allow for any questions, we want to make sure that you know what your options are. There are options out there. There are options that may be a better fit for you and your business, but you have to be able to, express that need. You have to be able to ask questions. You have to be able to, put yourself out there to learn about what your options are if you ever find yourself in a need. But again, working capital, is very important to all businesses, right? Very, very important. And, there's a lot of good fits for working capital, right? Buying another business, refinancing debt, equipment, implementing new strategies to better serve your community, implementing new marketing strategies, right? So there's a lot of good things that can come from working capital. There's, working capital is critical to all small business owners and specifically, our funeral home industry. So wanted to just share, that checklist, if you will, those 10 plans, 10 items that we wanted to kind of talk through with you before we come to the conclusion of our time. So we do have a few extra minutes. We want to make sure that, if anyone has any questions, that we address those. I will also provide my contact information as well, just in case there's a question, there's anything that you want to better learn or discuss further. My email address is andrew.kennedy@liveoak.bank. So if you see my name right there, it's just andrew.kennedy@liveoak.bank. And then Kalen's email address is the same, but with just a dot between his first and last name. And we would love to, discuss with you any working capital needs that you have. We would love to, dig deeper into kind of what the differences are in smart money versus fast money and what's best for you and your business. But again, at the end of the day, there are options to finance working capital, and we want to make sure that you are equipped to make the best decision for you and your business. So we'll look in the chat here and see if there's any comments, any questions. Kalen, thanks for throwing in the contact information there. Again, you can reach out to us at any point. We would love to have a conversation with you. We'd love to learn more about what your goals are, what your business goals are as well, and understanding, what's important to you and what you're looking to do so we can help make those happen.
Andrew, I again, want to thank you for inviting me on, but also thank you for your time in this. I think something that you hit on earlier in your introduction about being passionate about working with business owners is really, it should really highlight, a lot of what we're talking about today and things that we've seen in discussing and talking with customers and borrowers on a daily basis. And it just highlights, the service aspect of, why Andrew and I do what we do. And it's just awesome for us to be able to have a platform like this where we can talk through, how to accelerate business owners and their businesses and help move forward and build sustainable futures for funeral home owners as a whole. So, obviously, as you guys are thinking through questions or anything, just, happy to put those in the chat, but just wanted to highlight how awesome it is to have this platform to share with you guys.
Well said. Thanks again, Kalen, for joining. Appreciate all that you do for this industry and all small business owners across the country. Again, I want to thank everyone at ICCFA for having us. We always enjoy doing this. We always try to provide relevant content and education. And hopefully there was a few things that were learned throughout the session of the webinar today. But again, if there's anything you guys would ever want to chat on in the future, please reach out to Kalen and/or myself, and we would love to do that. Thanks again, ICCFA, and we will look forward to seeing you guys soon. Thanks.
Thanks.